Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Thursday, July the 23rd. Well, a very bullish day today. A very large green-bodied candle, which means that the bulls have made a very, very large net gain on the day from the open to the close. They've also opened the market at the low and closed up near the high, which means that the bulls have been in control for almost the entire day, and they have very strong control of this market, and they're very, very strongly committed. Now, we were looking for a strong close up above 960, and we've got that. We had that resistance area at 956. A strong close up above this area probably means that this uptrend will continue, and we'll be trading up to 1,000. We won't necessarily do it all at once. Quite often, when markets are as bullish as this, they'll have a bit of a rest, and this market has had green candles for about 7 or 8 days in a row now. So that's a lot of bullishness for a market, and they tend to have a bit of a break when something like that happens. Now, if we look at our configuration of highs and lows, we still have a higher high and a higher low. So we still have a first time frame uptrend. No change of trend at the moment. There was a warning that the market may have had a potential change of trend, but we need confirmation of that. We never call a change of trend until we have confirmation. So the previous 2 days to today were spinning top type candles. They were in a note of indecision in the market, and it's little wonder that that happened where it did, because the market was interacting with an area of resistance. But the bulls have come in and really bought this market solidly and closed way up above there. Now we're trading well up above the Kumo or the cloud, which means that the market is overall bullish, and we're trading up above the Tenkan-sen and the Kijun-sen, and both of them are pointing up very, very strongly at a very sharp angle, which means that this market has a lot of upside momentum. Now we need to bear in mind, though, that what happens with markets when they get a long way away from the Tenkan-sen and the Kijun-sen, they'll come back towards them eventually. And we look at it as though the market's like a rubber band. We can stretch the rubber band so far, but then the rubber band has to rebound back. And that will happen eventually. Very difficult to say when, but what we need to do is just keep an eye on the lows of the current candles. If the lows are taken out, then there is potential for that to be a new second time frame downtrend. Now, it doesn't mean that there will be a change of trend in the second time frame, though. In the first time frame, that's the trend that we're talking about at the moment, where we look at the current candles and we compare the highs and the lows. So the market is like a rubber band, and then as it trades too far away from where the Tenkan-sen and the Kijun-sen, it will become overstretched and then eventually rebound back to there. Now what we usually see is that those lines start to go flat. One of those lines, usually the Kijun-sen, when that goes flat, there's a very, very strong possibility that the market will retrace back to the Kijun-sen. Now that means that when that line goes flat, it means that the market is coming back to equilibrium. So this market is very strongly away from equilibrium, and markets move between equilibrium and disequilibrium. So at the moment we're in disequilibrium, and markets never stay in disequilibrium forever. They'll move between the two, and they'll fluctuate within a cycle. Now, there's no definite time frame to that cycle. It's very difficult to tell. But what we should expect to see is that eventually this market will come back towards the Tenkan-sen and Kijun-sen, and it should find support at the Tenkan-sen. It doesn't necessarily mean that it will do it at the moment. But all very, very bullish for this market. First time frame uptrend, and it's most likely that it will continue.